We got the Federal Open Market Committee minutes. It certainly still seems like they think the path is to continue cutting, and the likelihood of that cut coming at the end of the month is still pretty high. It's above the 90% mark. That being said, David Mazza, CEO Roundhill Investments, is with me. This as the S&P and NASDAQ are sitting at highs today. How are you feeling about the market before I get into the nitty-gritty here?
Well, look, it's a challenging market environment because on one hand, it feels great to have a series of all-time highs after all-time highs. On the other hand, we know that there's a lot of risks out there and valuations are now at the high end of their ranges. So I think it's reasonable that investors are taking a bit of a pause and a wait-and-see approach. But with that being said, the momentum is with the market. There's a lot of further potential from Federal Reserve interest rate cuts coming. And for the time being, economic data seems reasonable, even if it's decelerating a bit. So I think that's one of the reasons why investors are still confident in pushing indices higher.
So I wanted to talk about the retail investor, right? I mean, when I woke up and I saw the New York Post during the time that GameStop, every person was talking about the stock market. They all wanted to get in. They see things jumping and doubling, and what went from this great fad to now people are really looking for float, looking to see how much short interest is out there on a particular name, and then it becomes a meme stock. So where's the structure and the fundamentals versus the meme stock retail investor?
Yeah, it's interesting. I think the retail investor really became a force in the market, to your point, in the COVID period. And that was exemplified with the moves and the attention paid on names like GameStop and AMC. But what started really as a rebellion in markets has actually become a structural force. So we know retail participation on a daily basis has effectively doubled since the pre-COVID period to today. And now I think it's really difficult to ignore the power of retail investors and ways that they're actually shaping equity markets today.
So what about ETFs? Do we have opportunities? MEME, the first ETF. What are we looking at here?
Yeah, that's really one of the reasons why we launched the Roundhill MEME ETF, ticker MEME, MEME, today, is a way to allow investors to actually access stocks that have the potential to meme. And while meme in some ways remains a dirty word or a silly word, we actually think that's a bit silly to think about it that way because of the structural force that retail investors have. So what we've done is structure an ETF that allows investors to access meme stocks, a basket of meme stocks in an actively managed fashion, and has the potential to move in and out of names that exhibit likely high beta and high volatility, but doing so in a professionally managed fashion.
So names that are in here: Opendoor, Plug Power, Applied Digital, QuantumScape is also in there. I see Bloom Energy, Rigetti Computing. So you have these quantum computing names in here. Cipher Mining, Hims and Hers, IonQ, a lot of quantum computing. Hims and Hers has been crazy. I agree with that one. How often are these going to be changing?
So we're actually rebalancing the portfolio at least on a weekly basis. It has the potential. It's an actively managed fund. It has the potential to add or subtract names even more frequently than that. So it's a very active portfolio. And you're exactly right. One of the ways to think about this particular basket of stocks is from a thematic perspective. And so if we think about the portfolio today, there's healthy exposure to crypto and crypto adjacent companies, AI adjacent, quantum computing, a few hydrogen names in there. And these are going to ebb and flow based off of where retail demand is and really where, hopefully anticipating where retail investors are moving and being interested in. And again, because really what they're doing is targeting names that we're looking for a catalyst. Let's think about the Opendoor story. Of course, there's controversy with that name, but there's controversy with NVIDIA, and there's controversy with Microsoft at the levels that they're trading at today. And but what was needed was really the potential for retail to get behind the name, and MEME is really structured in a way to take advantage of that.
Why don't you have names like GameStop and AMC and BlackBerry and all those other names that were in there? Why don't you have the old meme names in there? I mean, are you going to try and keep it to 10 stocks or something?
The portfolio today has 18 names in it. GME, AMC, they're the OG meme stocks. They really kind of put meme and put retail on the map. But this isn't 2021 anymore. It's 2025. And what I think we found is that retail as a structural force, as a group of investors, are going to be focusing on different names at different times. So just because a stock has that meme moniker and in some ways is still memeable, is not really where the chatter is happening in online communities. It's not what we're seeing with implied volatility. So those names aren't in the basket today, and others, like you mentioned, Opendoor, Applied Digital, Plug Power are, because those are the names that actually are most trafficked in by retail and where we think there's further opportunities.
So is this, I think you were talking about it, using it as a hedge, but is it dollar for dollar? Does it protect on the downside? Is it leveraged in any way? Is there anything we need to know about it other than its face value?
This fund, I think most importantly, you think about it, it's an actively managed ETF. The portfolios, the positions will change. It will be dynamic from that point of view, but there's no leverage in the portfolio. Investors could use it as a hedge should they want to, or they can use it as a satellite position to take advantage and introduce the potential for some excess returns in their portfolio. But the ETF, it's a one beta ETF, actively managed ETF.
Yeah, actively managed, I think, is the key point there, because you're going to be looking at it every single week and evaluating the members in this. And last but not least, I mean, I have to assume that you presume this will go higher over time, right? You didn't create an ETF to tank, right?
100%. Really, again, the original impetus of this was saying, how can we harness the power of retail investors? They have such an important component in equity markets today. And the idea being, can we identify stocks that are really going to be influenced by retail, get them on the radar of other investors, take advantage of that momentum, and do so dynamically.
David Mazza, great to see you, CEO, Roundhill Investments. Thank you for joining us on the show. Appreciate it.